This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's daily oil processing rate dropped 1.1% in the first 2 months of 2022 from a year ago, to the lowest since December 2020, as independent refiners scaled back operations after Beijing slashed their crude oil import quotas. Throughput in the January to February period reached 113.01 million tons. Data from the National Bureau of Statistics showed on Tuesday, equivalent to 13.98 million barrels per day. The Bureau combines data for January and February due to the Lunar New Year holiday, which fell in early February this year. China cut its first batch of 2022 import quotas to independent refiners by 11% from 2021's first allotment, as Beijing aims to consolidate its refining sector by removing excessive and inefficient processing capacity.
Oil prices dropped to their lowest in almost 3 weeks on Tuesday as Russia indicated it is in favor of the Iran nuclear deal resuming as soon as possible. Ceasefire talks between Russia and Ukraine further eased fears of supply disruptions, and surging COVID-19 cases in China fueled concerns about slower demand. Brent futures were down $8.90, or 8.3%, to $98 a barrel at 11:25 GMT, while U.S. West Texas Intermediate (WTI) crude was down $8.97, or 8.7%, to $94.04 a barrel. Both benchmarks fell below $100 a barrel for the first time since March 1.
Moving on to the top news in the energy sector.
The European Union formally approved on Tuesday a new barrage of sanctions against Russia for its invasion of Ukraine, which include bans on investments in the Russian energy sector, luxury goods exports and imports of steel products from Russia. The sanctions, which come into effect after publication in the EU official journal later on Tuesday, also freeze the assets of more business leaders who support the Russian state, including Chelsea Football Club owner Roman Abramovich. The European Commission said in a statement on Tuesday that the sanctions included a far-reaching ban on new investment across the Russian energy sector.
China's two main trade policy banks made no new overseas energy finance commitments in 2021, a first for this century and a sign that Beijing's pledge to stop investing in foreign coal plants is already in effect, new research showed on Tuesday. The shift was highlighted in a new study of China Development Bank, CDB, and the Export-Import Bank of China, CHEXIM, project commitments last year by the Boston University Global Development Policy Center. Chinese President Xi Jinping pledged to end his country's support for new overseas coal power plants during a video address to the United Nations General Assembly last September. Next, we have the top news in metal markets. China's daily aluminium output in January and February rose to its highest since mid-2021 despite pollution curbs in the heating season and during the Winter Olympics, as smelter hubs located away from the capital Beijing maintained operations. Primary aluminium output in China, the world's largest aluminium producer, however, was down 1.4% year-on-year at 6.33 million tons in January and February combined, the National Bureau of Statistics said on Tuesday. This compares with 6.45 million tons in the first 2 months of 2021. The January to February 2022 data indicates that output averaged 107,288 tons per day, the highest daily levels since June 2021, according to Reuters calculations.
Gold extended its slide on Tuesday as ceasefire talks between Russia and Ukraine reduced demand for safe haven assets, while bets that the U.S. Federal Reserve may raise interest rates for the first time in 3 years added to pressure on bullion. Spot gold was down 1.3% at $1,926 per ounce, as of 11:56 GMT, after earlier touching its lowest since March 2 at $1,920.36. U.S. gold futures fell 1.7% to $1,927.80. Some faint hopes that talks between Ukraine and Russia may somehow lead to a de-escalation has affected safe haven demand for gold, Active Trade senior analyst Ricardo Evangelista said.
We will now look at the top news in the agricultural sector.
Russia on Monday temporarily banned grain exports to ex-Soviet countries and most sugar exports, but a senior minister said it would keep on providing special export licenses to traders within its current quota. Russia is the world's largest wheat exporter, with Egypt and Turkey among the main buyers. It competes mainly with the European Union and Ukraine. Prime Minister Mikhail Mishustin on Monday signed an order banning the export of white and raw sugar until August 31st, and banning wheat, rye, barley and maize exports to neighboring Eurasian Economic Union states until June 30th. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.